Welcome to the DSG Podcast, exploring the intersection of on-chain and traditional finance. As a digital securities platform committed to open finance, we bring you insightful conversations with industry leaders and innovators, exploring the evolution of capital markets. Whether you're a finance professional trying to raise capital or curious about on-chain finance, tune in for grounded perspectives on where finance is headed. The content shared in this podcast is for informational purposes only and does not constitute financial, legal, or investment advice. DSG does not endorse any specific investment strategies or provide advice specific to any individual's circumstances. Listeners should consult their own investment advisors before making any decisions based on the information provided. Now let's get started. All right. Welcome back, listeners, to another episode of the DSG Podcast. Today, we're talking to some of the team at Savala. I've known the Savala team for a little while now. They're doing some really interesting things with blockchain-powered commodities. And our guest today is Sasha Jacob. Welcome, Sasha. I'm looking forward to chatting. Why don't you just give the listeners a broad overview of your career up to here and how you got involved in the space?
Sure. Yeah, happy to. I was a longtime investment banker, ran a firm in a full-service investment dealer based out of Toronto, and our focus was renewable energy. I was actually one of the first bankers in that sector beginning back in 2000, and I've been involved in about $8 billion of equity in that sector. And because of that expertise, we understood the demand side of some of these energy transition minerals really well, and we were also quite active in the strategic mineral and battery mineral space, such as graphite and lithium and cobalt and rare earths. So that was my background. For almost the last 10 years, been mostly a principal investor, so mostly a direct investor in those same sectors as well. So we're mostly in renewable and related energy fields.
Fantastic. And when you talk about like renewable and kind of the green economy, how does something like graphite fit into that picture?
Yeah, it's a lot of people don't recognize that graphite is actually the largest component in an electric vehicle battery or a storage battery. So over 45% of that battery, or almost the entire anode part of the battery, is all graphite. So it's an extremely important mineral, and its growth is it's forecast, for example, by the World Bank as the commodity that has the largest growth over the next 30 or 40 years out of all of the energy transition minerals. So it's an extremely important commodity. It also has become now quite constrained in supply. In September, October last year, China announced that they were going to block export restrictions. And the reason that that's so important is that China is responsible for over 95% of the processed graphite market globally. So this has, of course, caused severe concern by most countries, but particularly the U.S., which has also introduced in March of this year a 25% import tariff on graphite from China. So there's a real push to get other sources online, but it's not easy to do. As you know, mining is difficult, takes a long time to permit, and Savala is fortunate to be in this position where it is able to contract some very high value commodity contracts in both graphite and antimony.
And obviously, it's hard to know exactly, but from a global speculation, what do you think the reasoning is behind blocking exports of graphite in China?
Well, clearly, it's a bit of trade warfare. Anticipating that there will be a crunch of some of these materials, and it could be a negotiating tool down the road. But it's also just really domestic consumption. They would like to control as much of the supply and keep this production domestically. So there's been a mad scramble, as you've probably seen, of battery plants being built all over the world. A lot of the Chinese companies are building plants in other parts of the world to try to get around some of the restrictions and tariffs that are there. but it's really a big scramble. And antimony is actually quite similar. So the majority of antimony is controlled by China and Russia, and it's facing very similar supply constraints. And again, also dramatically increasing demand. If you Google a chart of the antimony price, you'll see it's one of the best performing commodities anywhere this year. It's gone from about 7,000-8,000 a ton to about 32,000, which is the biggest growth it's ever seen. So quite an interesting circumstance right now, and interesting geopolitical overlay in these minerals.
Yeah, well, I know some Indonesia's been really restricting its exports of nickel because it really wants to get more into the downstreaming and the maybe the higher value, down the kind of production chain. So probably something similar. But yeah, I think most people have at least heard of graphite, but antimony is probably a little bit out of left field for most people. So how does antimony fit into the picture of what we've talked about so far in terms of the kind of movement towards green and batteries and things like that?
Yeah, it's also a mineral that's used in various energy transition applications. For example, solar panels, not in the silicon in the cell, but on the actual panel, the glass strengthening materials. So it's also really seeing significant demand. It's used across quite a range of industries. The biggest issue is new supply. So it's usually a byproduct of another mineral, primary mineral production. There's not that many, certainly not many new ones that are forecast to come on stream in the next few years that are pure antimony production. That's relatively rare. The resource that Savala is contracted with is a vein system, a high grade system, actually just as the graphite is as well. And it is starting out at about a 20% grade production, increasing to 50% over time as it goes underground. And the company is also will be processing at site. But very, very few. I just talked to actually one of the leading research analysts in these minerals, and he's been talking about the supply deficit that was coming up for antimony for many years. He's forecast this. And we're there today, and there's very few resources. We're actually not aware of another mine that's ready to produce in the next 24 to 36 months. So it's, again, quite a unique circumstance and a fortunate position for Savala buyers to be able to access these commodities directly that are both in immediate production that'll be producing and selling immediately post the next financing.
Awesome. And we're going to jump soon into the Savala platform and the blockchain power behind it. But just for the listeners, what is the difference between graphite and antimony and some of the other kind of hard commodities that people might be familiar with, nickel and copper? Because there are some quite big markets and future markets and kind of derivative options with those. What about graphite and antimony?
Yeah, this was really one of the reasons for Savala is that those other commodities, some of the ones you mentioned, like nickel, you can get a quote on the London Metals Exchange. You can buy the futures contract. If you're an end user, you can hedge using that futures contract. In these metals, there is no such market. So graphite and antimony you cannot purchase on the London Metals Exchange or the Chicago Mercantile Exchange, where most commodities are traded. So really, the whole premise behind the platform was to offer buyers, investors, end users, speculators for that matter, an access to the commodity for the very first time, which is really, really, again, unique for the ability to own a direct ton through purchasing a graphite token or an antimony token. That's one of the key reasons to provide that access. And also to provide price discovery. So because these commodities aren't being traded on any of the commodities exchanges, there is no real price discovery. There are publications that talk about pricing in the general context, but it's not real pricing that's mark to market, minute to minute, day to day. It's really reflecting what the physical contracts they can observe were entered into over the prior months. It's really somewhat backward looking, and it's also very limited in terms of the information that's available because it's restricted by China mostly. So the information that's given to to the world market is really what they choose to release. This type of platform really functions the same as a commodities exchange, but it's also not a derivative like a futures contract. A derivative, you don't really necessarily own that exact ton. But here, with this platform and the technology behind it, the buyer owns that actual ton, and hence the eventual return. And I think we'll talk a little bit about some of the technology behind it and the other benefits that the technology can provide to the end users and to the producers and to the miners as well.
Yeah, that's a perfect segue. So, why build on blockchain? What's the value proposition there?
Yeah, it's really that chain of custody. So to be able to say that that ton that that buyer owns, where it came from, where it's gone, what its environmental footprint is, which is extremely important to the end user. You know, I've had discussions with some of the major EV producers, the heads of the EV divisions for some of the manufacturers, and it is of paramount importance for them to be able to understand the chain of custody for the material, especially a material like graphite that makes up 45% of a battery. So you know, that's really important to be able to understand that from, you know, social aspects, environmental aspects, and you know, and how that moves. In the case of graphite, it's often blended. This natural graphite is often blended with synthetic graphite, which is a byproduct, a petroleum byproduct. So clearly not environmentally friendly. And the graphite coming from China also uses very, very harmful environmental processing, you know, acid leaching and that type of thing. So it's really important to the end user to understand, you know, what that carbon footprint is. So as an example, in the case of this graphite that Savala has contracted, it actually happens to be one of the lowest, what's called life cycle assessment carbon footprints globally. So it has tremendous value by being very, very environmentally friendly. And by having each ton associated with a token and on the chain, the end user can understand that, you know, that the merits of this and where it came from, and its low carbon footprint.
Awesome. And so, do you foresee users using this, you know, as part of their supply chain and actually take delivery of the graphite? Like, or is it for speculation, or a bit of both, or for hedging? What are your thoughts there?
That's a great question. We actually had an inbound call from a very large commodities trader in the US, and that asked that exact question: could one take physical delivery? Don't know if that was a question on behalf of an end user or it was a potential arbitrage opportunity, or a hedge. But that is definitely possible. So an end user could purchase on the platform any amount that they wanted to on the secondary market or on the primary market as well. So it could be on the current offering, or after it begins trading on the secondary market on the Savala platform. But yes, absolutely, an end user could purchase those tokens and then request physical delivery. If that's not done, which we suspect on the first order probably won't. It'll be mostly investors looking for the cash return. So in that case, the miner, the producer will sell on behalf of the platform, which they're contracted to do, and they're contracted to achieve the best possible price, and they're incentivized to do so as well, because there's a split on the return above the hurdle price that you'll see on the website and in the documentation. That is split between the investor, the buyer, and the producer, so that everybody's incentivized to get the best, you know, the highest possible price. And then once all those tons are sold, then the cash will be redistributed to whoever owns the tokens. If they haven't been sold in the secondary market, whoever owns them that is purchased on the secondary market will then receive that cash distribution at the end.
Awesome. And so we've talked, you know, there's been discussions about, you know, a price of purchase and then a delay period, obviously, you know, some operational stuff there, and then the closing of that. Maybe walk us through from like step by step what that process would look like, and maybe some estimation of timeframes.
Sure. Yeah. So buyers can go to the website directly now at savala.global and purchase the graphite online. through either cash settlement or through USDT. And the antimony is going to be live. Currently, you just reflect the interest through the email there, and then it's settled currently with documentation, but will also be settled online shortly. The initial contract for the graphite, the introducing round, which this is this is currently, the purchase is at $900 per ton, and then there's a guarantee of a minimum of $1,200 on the selling price, likely to be higher because the intention is for some of the graphite to be processed to 99% carbon from its current 95%, which has a much higher selling price. So as I mentioned, then that higher return will be shared between the producer and the buyer. The antimony is at $600 a ton, and it has a guaranteed $1,000 sale price per ton. But as I mentioned, the price has gone considerably higher. So even at the initial lower grade I was mentioning, that's going to be sold, the initial 20 to 30% out of the ground. It's considerably higher market price right now. One of the interesting aspects you'll see on the site also, it's currently static, but once the secondary market opens, it'll be live. There will be what's like a meter that shows what the actual underlying value of the token is in terms of either how much has been sold, so the cash component that's sitting in the bank that'll be distributed, plus the commodity value of what's left to sell in the contract, and then on a per token basis. And we thought that's a really interesting part of the technology, because it should mean that there's not much dislocation on the price that the secondary market's trading at and the underlying value of that token that can be seen on every day, which again is quite unique. So really a true example of a real world asset that's being tokenized, and you can see this literally on a daily basis on the actual underlying value. So from an arbitrage standpoint, we think what that would mean is it should never really be trading much lower than its underlying value. Otherwise, somebody would come in, buy up all the tokens, and take on the cash delivery eventually. That's there. So the more people that go to the market and are trading and active, just like any other exchange or market, the better price discovery will be, and the tighter that spread will be. So we're quite excited by that, and the future of Savala and really growing as a platform for whether it's buyers that want to own it, or arbitrageurs or end users.
Cool. And what are the requirements to go onto Savala.global? Do you need to bring your own wallet? Do you need to know anything about crypto? Like, what's the level of understanding of that stuff that people would need to engage?
It's been extremely well designed and is very, very easy to use. I'm certainly not a crypto expert, but I was able to purchase my initial tons very, very easily. And the documentation and the settlement that's emailed immediately to you and automatically is very, very seamless. So both in terms of the front end portion and opening and a little bit of KYC is very, very simple. It takes definitely less than a minute. It takes probably 20 seconds or so. And then the transaction itself is also extremely easy. So it's, if somebody is more sophisticated and has their wallet and wants the tokens moved to their wallet, they of course can do that, or it can be custodied by the platform and then await the secondary market, and then the receipts and documentation, your links to the evidence on the chain are all sent automatically, immediately post transaction.
Awesome. So it's the best of both worlds. Choose your own adventure. If you're crypto savvy, you can self custody. Otherwise, there's a solution which is great. That's the way of the future. Certainly, the way of DSG is being able to take all that kind of complexity out of it and just make it really simple interface. And we're hoping to have Savala tokens on DSG in the near term future. That'll be very exciting for us. It's a great overlap with our vision and what we want to do as well. Let's lean into a little bit more with the blockchain technology. So obviously I can understand why graphite and antimony are such a great first use case, because really it's solving a need that isn't being provided by other market participants at the moment. How do you see that cascading on to other types of maybe hard commodities or other kind of verticals? Where's the future of Savala, do you think?
Yeah, it's quite exciting. One of the other key things that the platform solves is for the producer themselves. So these commodities are quite hard to raise capital for often. If you're in pre-production, usually there's a significant amount of dilution that's required. Selling equity, and pricing can't be favorable, and that's because often in these commodities there aren't long-term offtakes that are immediately available. Most of the end users want to see certain volume of production before they enter into long-term contracts. So without that long-term offtake, it's difficult to get project finance or project debt. So a lot of these companies, even if they have an incredible resource and are immediately ready to produce, is usually relatively difficult to access the financing until they get going and are in a scaling mode. And we need these commodities, even with all of this demand. It's still relatively difficult. So what Savala also does is provide a non-dilutive source of capital for these miners, which is extremely valuable to them. So they're receiving this capital in the form of what's called a prepay contract, where Savala is purchasing upfront the commodity to be delivered down the road. For, of course, it's a pretty significant discount to the market price, which is the return that's passed on to the buyer. So we hope that as these two contracts are fulfilled, the platform currently has contracted value of $20 million. And actually a little bit higher than that. It's closer to 25 million. That's already contracted and available to be passed through to buyers. And as the secondary market goes live and the other participants start coming in, the platform will be looking to list both additional commodities, but also additional graphite and antimony contracts themselves. So it's almost like an investment banking platform really in the middle that it's acting as. It's getting the contract with the producer and negotiating that for very good terms that are passed on to the buyer, and then is accessing the capital through the people purchasing on the Savala platform. That's of course capital passed back to the miner to produce. So we could see we're looking at lithium contracts as well. Potentially cobalt, also, which has a huge need for ESG tracking on the blockchain, which is very, very opaque now. There's quite a few articles you could Google about the concerns from end users on cobalt sourcing, and then we could look at other commodities after that. So the goal for Savala is definitely to be a platform, a go-to destination for people looking to raise capital that are producers or immediate near-term producers, and then for those other communities that we talked about, whether it's financial speculators, people looking to arbitrage or to hedge, or those end users.
Awesome. And is this open to like all participants, retail and wholesale, or what are the requirements around that?
Exactly. It would be open. The secondary market will be open to anybody. So you could really, whether it could be a financial institution for that matter. So financial institutions looking to again either hedge on behalf of clients or themselves take an outlook and a position. That's definitely available. So we expect as the knowledge of the platform and becomes more wider spread. There's already been some good media interest, but we expect that to pick up quite significantly post closing the first two rounds on both commodities. We expect to see a lot more attention being driven to the platform, and I think that's going to be fantastic both for the buyers that are buying now and the price appreciation. And then for those other participants that are benefiting from the capital as miners, and from the end users as well.
Awesome. And like some of our audience, from legal backgrounds and regulation and kind of regulatory frameworks is a big discussion topic, especially in tokenization. So where does this fall? Like what country is it domiciled out of? Like what can you tell us about the regulatory framework behind the offering?
Yeah, absolutely. So it is a Canadian corporation, and a lot of time was spent on the legal framework, as you can imagine. So a leading law firm, Castles Brock, in Toronto, formed all the underlying agreements, both with the producers and then with the Savala buyers. And what's really unique about this is it is not a security. It is a direct purchase of a product because you're physically owning that ton. It's not a derivative. It's an actual sale of a ton of graphite or antimony to the buyer. So because of that, it would be just like two participants, two individuals, purchasing and selling some other product or commodity. It is just a direct sale between the two entities. So there was a lot of work put into that with a great legal team, and has resulted in this really seamless transaction, and definitely not a security of any kind, which of course allows for wider, greater direct distribution, and really helps facilitate the secondary market, to resell as well, very seamlessly, because it's a simple, pretty simple agreement of purchase and sale.
Nice. Are there any jurisdictions that are excluded from the offer?
No, there aren't. Currently, it can be available from any jurisdiction.
Awesome. Cool. And then the other thing with mining, I mean, especially in Australia, there's a pretty decent kind of market knowledge of the mining sector. It makes up a big part of their economy. Sometimes the perception would be kind of like high risk, especially at the beginning of the mining kind of life cycle. What can you tell us about maybe the producer in Sri Lanka, and maybe about how some of those steps have been de-risked?
Yeah, absolutely. So in both cases of the commodity, they're immediate producers. So post the capital going in from these offerings, they will be going into production and scaling, pretty rapidly. Again, quite unique. I think because of our banking, histories in the sector, the platform and the principles behind it have very strong, deal flow in these sectors. So these are companies that I've known directly and been involved in directly, and we're able to secure these because of that history. Not easy to find resources that are immediate producers. So in both cases, again, they're both historical producers as well, which is interesting. So definitely de-risked it a little bit from the resource side. The graphite does have resource estimates on it, but is in a unique position where there's graphite veins that are visible and immediately ready to produce. And in the case, and they'll scale. So it'll start off at in this particular case at relatively modest volumes. I believe they'll probably be starting at about 30-40 tons per month, and then scaling in that particular resource, it'll be scaling to about 400 tons a month of production. And as I mentioned earlier, that group is also intending to do some processing at site to upgrade from a very high in situ grade of 95% to 99%, which causes almost a tripling in the revenue. That resource also has a very low mining cost and a great environmental footprint. As I mentioned, it's all underground mining. There's no primary processing. And what that means is most graphite around the world has a very low grade, less than 10% carbon. And they have to crush that, float it, mill it, and then they get a higher grade, 85 to 90% slurry that then is sent further to process. In this case, it comes out of the ground at 95%. So you can see how the environmental footprint is so much better. But also from the processing side, or from the mining side, is quite easy and can be direct shipped right out of the mine. And again, one of the benefits of why this fits perfectly with Savala and is able to start generating cash quickly. In the case of the antimony, again, historic production, starting with surface mining, as I mentioned, 20 to 30% grade. And then as it goes underground, the grade does go higher. And again, the company will be processing at site to get over 50% purity, which is very, very valuable in today's market. But it also will be direct shipping the initial material straight to port, and then probably processing about 9 to 12 months to the higher grades. So to answer your question about timelines, again, you'll see reflected in real time how much has been sold, again on a per token basis, how much is left in that underlying contract value. But we'd anticipate for all the volume to be sold, it would be about 24 months if for the final sales, and then a final distribution to whoever the holders of the tokens are at that time.
So some of the kind of rough kind of numbers were 30%-ish plus over 24 months, so annualized kind of 15%-ish per year, which is a pretty healthy return, and obviously could be higher than that. But I think what excites me the most is, and you'll know this, I'm preaching to the choir here, Sasha, but it's the first time doing something like this and proving it all out is the hardest one. And then as soon as you get a bit of momentum and you've proven it, all the kind of the early adopters will sometimes be the champion early, but the vast majority will wait to see, and they'll miss out on some of the juicier opportunities. But that's just the way the world is. So I'm really looking forward to helping any way I can for you guys to prove this, because I think it not only does it solve a market problem and a commercial problem, and investors are always looking to diversify into different asset classes. But I think from a blockchain provenance, being able to track social footprint, environmental footprint, I think it's so important for the future going forward. And that in itself is a really big selling point to bring in institutions. And of course, that's where lots of the volume is going to be realistically. Yeah,
we're very, very excited by the partnership with DSG and thankful of all of your support to date. Really excited to be listing on DSG soon as well. And we think that's going to be a phenomenal exchange for the underlying tokens, and maybe eventually a parent co Savala product as well. But yeah, very grateful for the partnership with DSG.
Awesome. So let's just go through one more time where people can go to take action, and if there's any kind of deadlines around that, let the listeners know as well.
Yeah, so the initial pricing, this discounted pricing, is available for another about 2 weeks, or just under 2 weeks, and that can be purchased directly at savala.global. And I think you'll be circulating some of that information as well in the links, which will be great.
In the show notes, yeah.
Perfect. And then the immediate purchases of the antimony should be reflected by the email links that are there. There is currently there will be just one, a simple document that would need to be executed, but the settlement process will be the same in terms of either USDT or cash directly in. And as I mentioned, both are anticipated to have secondary markets in Q1 of next year, which provides immediate liquidity if somebody didn't want to hold it all the way to the final distribution.
Yeah. And what would be the minimum purchase amounts in both of those?
Yeah, the minimum on the graphite is actually it's only one ton. I think you can purchase a ton at a time there at the 900, and the antimony was 10 tons. So at 600, so it's 6,000.
Oh, and do you have to do the graphite to get access to the antimony, or you could do either? What's the story there?
Yeah, currently on the platform, you could do either one.
Okay. Awesome. Cool. Well, that's great, Sasha. Thank you so much for sharing. I think it gives a lot of people insight into, an area that they wouldn't usually have access to learning about. So that's awesome. Any other closing thoughts before we wrap up?
No, again, any questions, please don't hesitate to send directly into the email addresses that are on the website, and we'll respond right away on any questions. We've got a fabulous team behind it that will respond almost instantly. Of course, always happy to speak to anybody directly as well, and do Zoom calls or whatever is required. We're very excited about getting this round closed, and then all of the additional opportunities that will come through the platform.
Awesome. Thanks so much, Sasha.
Thank you, Ryan.